Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Work and play are words used to describe the same thing under differing conditions. Principles have no real force except when one is well fed. The rule is perfect. In all matters of opinion, our adversaries are insane. Fiction is obliged to stick to possibilities. Truth isn't. If the thermometer had been an inch longer, we'd all have frozen to death.
The digital economy now runs on a surprisingly small number of servers. Amazon AWS, Microsoft Azure, and Google Cloud together control about 63% of the global cloud market. AWS leads with 28%, Azure follows at 21%, and Google Cloud holds 14%. That dominance means most of the world's apps, AI models, and corporate data are ultimately running on infrastructure owned by just three companies. Smaller players from Oracle to Alibaba are competing, but the gap remains enormous. In today's economy, whoever owns a cloud quietly owns a large part of the internet. Emerging markets rarely move in straight lines. Just a year ago, India was a star performer, attracting huge capital inflows and pushing its weight in EM indices close to 19%. Now the pattern is shifting. Countries like South Korea, Taiwan, and even China are seeing stronger returns, particularly in technology and cyclical sectors. Meanwhile, India's weight in the emerging market indices has slipped back towards 13% as investors rebalance. In global investing, leadership doesn't disappear. It simply rotates across markets looking for the next growth story. A quiet but powerful force is reshaping the global economy: demographics. Populations across advanced economies are aging rapidly, fertility rates are falling, and the workforce is shrinking. That means fewer workers supporting more retirees, putting pressure on pensions, healthcare systems, and economic growth. Some countries are already responding, raising retirement ages, relying more on immigration, and increasingly turning to AI and automation to fill labor gaps. In the coming decades, the biggest economic question may not be productivity or inflation, but simply who will still be working. Corporate India's earnings story is cooling after a blistering run. In early FY24, profit growth for companies surged as high as 40 to 47% year on year. But since then, the pace has slowed sharply, even dipping briefly into negative territory in parts of FY25. Now the numbers suggest a more stable but modest recovery, with earnings growth moving back into the mid-single to low double digits. Strip out volatile sectors like oil, gas, and metals, and the trend looks slightly steadier, but still far from the earlier boom. In markets, explosive earnings growth rarely lasts forever. Eventually, even the fastest runners need to catch their breath. India's next economic surge may not come from its biggest metros. Research suggests Tier 2 and Tier 3 cities could drive much of India's GDP expansion through 2030. Cities like Coimbatore, Surat, Nagpur, Nasik, and Kochi are emerging as fast-growing economic clusters. Why? Lower costs, improving infra, and businesses spreading beyond overcrowded metros like Mumbai and Delhi. As highways, logistic networks, and digital connectivity expand, growth is literally moving deeper into the map. Wall Street has its own superstar league. In 2025, hedge fund managers earned billions, led by Steve Cohen with $3.4 billion, followed closely by David Tepper and Izzy Englander, each crossing the $3 billion mark. These fortunes come from the classic hedge fund formula, managing huge pools of capital and taking a slice of profits when bets pay off. When markets move in their favor, the payouts can rival those of tech founders or athletes.